have got two gentlemen here with me. First, David Wong, who is Senior Investment Strategies at AllianceBernstein. And David brings with him more than 2 decades of experience in global equity markets. And prior to joining AllianceBernstein, he was with a hedge fund in Hong Kong. And early on in his career, he was an equity research analyst at both Bankers Trust as well as Deutsche Bank. And second, I've got Karen Kamadarian, who is the founding partner of Thematics Asset Management. So Karen is also the chairman and chief investment officer at Thematics. And Karen brings with him more than 25 years of industry experience, both on the sell side as well as the buy side, of which 12 years was spent managing global thematic equity funds. He notably created and managed the first of its kind robotics active fund in 2015. So with that, please join me in welcoming both of our guests for today. There are a couple of housekeeping items which I'll need to share with you. So first of all, we have got our disclaimers from Endowus. And second, we do have that from our partners, AllianceBernstein, as well as Thematics Asset Management. Okay, and if you would like to ask any questions about the topic that we are discussing today, please go on to Slido and type 453308. So this is the number 453308. And we'll take questions towards the end of the session. For our new friends who are joining us for the first time, Endowus is a fee-only wealth platform, and we are the first digital advisor that can cover cash, CPF, as well as SRS. So if you have not seen what we can do for you when it comes to investments, do check out our website or our app itself. For next week, we have got a topic on China, so please do remember to dial in at the same time at 7 p.m. where my colleagues Sam as well as Kyungju, together with our fund partners BlackRock and Neuberger Berman, would be talking about China equities as well as fixed income. First of all, let me quickly run through with you the newly launched Endowus satellite portfolios. We have got our core portfolios that are built on both flagship as well as ESG. And the core portfolios are meant to be the foundation as well as your backbone when you're thinking about allocating to your investments. So typically, your core should be the main part of your overall investable wealth. But at the same time, you can also add on satellite allocation, which are what we deem as the best opportunities that the industry can offer in terms of promising ideas and investment teams. They are also going to be easy to use because we have curated them for you. So you can simply go onto the app and select any of the satellite portfolios where we have already optimized and selected the best-in-class funds for this solution. So we have launched 6 different satellite portfolios, namely technology, China equities, China fixed income, global real estate, megatrends, and low volatility fixed income. So do check out all of these 6 offerings. Today, we're going to talk about megatrends. So my colleague Yuhan is going to share with you the details of how we have put together the megatrends portfolio. Over to you, Yuhan.
Thank you, Wei, and hi, everyone. So now let me just do a quick recap of the Endowus Megatrends portfolio. For those who are new to Endowus or have not managed to go through our introduction webinar or the insights article. And so firstly, to touch on performance, the Endowus Megatrends portfolio has done rather well over the past 4.5 years or so. So it's managed to outperform the broader MSCI All Country World Index, as well as the All Country World Index healthcare indices, both on an absolute and risk-adjusted basis, with an annualized return of 17.5%. And the volatility levels are roughly similar, thus giving the Megatrends portfolio an attractive return-to-risk ratio of about 1.4. So Endowus believes these positive attributes are derived from our partnership with reputable fund managers, and the utilization of their institutional quality funds, as well as the portfolio optimization done by the Endowus investment team. And next, to recap, the Megatrends, sorry, next slide, please. Yeah. To recap, the Megatrends portfolio aims to provide investors with exposure to three major themes: quality of health, quality of environment, and quality of life. And within each of these three major themes are also interesting and attractive sub-themes, such as medical innovation, clean energy, safety, and several others that our guest speakers will touch on later. And on this next slide, we can actually see the breakdown of the Megatrends portfolio across 6 different funds, with a greater allocation to the 3 core funds that are multi-thematic in nature and further supplemented by 3 single-theme focused funds. So these 6 funds taken together would provide investors with a robust exposure to the 3 major themes mentioned previously. And finally, on this page, it's actually the cost breakdown of the respective funds and the overall portfolio. As I'm sure our investors are now very familiar with, Endowus fully rebates all trailer fees back to the end investor, thus enabling a reduction of 36% of the portfolio's total expense ratio to an affordable 1.17%, especially for a more specialized portfolio like the Megatrends portfolio. And I'll now like to pass on the time to our distinguished speakers, David and Karen, who will provide a quick introduction of their respective firms. We'll start off with David and AllianceBernstein, followed by Karen and Thematics. Over to you, David, please.
Great. Thank you so much, Yuhan. And thank you to Endowus for selecting our funds and for having us this evening. It's my pleasure to introduce AllianceBernstein to you. If we could go to the next page, I'll just touch on some of these quick highlights briefly, but we are a firm that has $742 billion in assets under management with an on-the-ground presence across 51 cities around the world. We have 357 investment professionals and since 2011 have been a signatory of the PRI. If you go to the next page, on that point about responsible investment, we very much believe that we have to walk the talk. We have to act as a responsible firm. We need to invest responsibly. And in terms of responsible investing in action, we have 501 billion of AUM under full ESG integration. Both of the strategies you'll be hearing about tonight from us are actually fully integrated. And one of them is additional to that, a sustainable, what we call portfolio with purpose. We are very serious about our commitment to stewardship and vote our proxies and actively engage all of our companies that we hold for better outcomes for our clients. On the next page, you'll see more about our equities business specifically. We are really a global collection of equity boutiques where we really try to bring synergies to our individual asset managers by giving them a variety of tools to improve their risk-adjusted returns. And you can see our total active equity AUM at the firm is 260 billion, including 73 billion in our various global and international strategies, which both of the ones selected by Endowus for the Megatrends portfolio would be included under this particular bucket. On the final page, actually, why don't I turn the time over now to my co-presenter, Karen.
Thank you, David, and good evening, everyone. So a quick introduction to Thematics Asset Management as well, my end. So Thematics Asset Management is a boutique really focusing on thematic investing, as the name says it. It has been founded by former Pictet Asset Management fund managers who used to work within the thematic franchise of Pictet in Switzerland. And Thematics Asset Management was created really with the idea to bring thematic investing to the next level, really in terms of how we design investable universe that are really attractive, thematic strategies that are also attractive investment propositions. It's also about really implementing a process which is repeatable for delivering performance to clients, and really also applying ESG criteria throughout the process, whether it is in terms of how we define the investable universes, how we select stocks to include in the portfolios, and as well in terms of how we size positions. And really the idea around thematic investing also was to partner with Natixis. We are one of the affiliates of Natixis Group, partnering with them within their multi-boutique model, and really bringing that thematic expertise to them, and really relying on them also to bring us the infrastructure of a big asset management firm that you know, and also the distribution network that they provide. And really, I mean, the idea also behind thematics asset management is really, I mean, these four pillars that you see that are part of our philosophy. Basing thematic strategies on secular growth trends, the mega trends that we are going to talk about today. Having, I mean, really a focused approach, really knowing a lot about a little part of the market, really focusing on attractive thematic strategies. Having an unconstrained approach to investing, so no constraints in terms of market capitalization, in terms of geographies, in terms of sectors, or in terms of benchmark. We don't invest based on any index as a benchmark. And lastly, about responsible investing. These are really the core pillars of our philosophy that translate into the way we design the strategies and the way we manage the portfolios. And so if we move to the next slide, from the 6 founders that you see here in pink on this slide, the company has grown quite significantly over the last 3 years. We are approaching the 3-year track record for the first funds we've launched. We are a team of 12 fund managers, always 2 PMs dedicated to each strategies, having a dual role of analyst and fund managers at the same time. Managing today about $4.5 billion US dollars of thematic strategies, and really with, I mean, we started with the let's say the legacy strategies, which were AI and robotics, safety, water, the Meta fund that Endowus has selected, and thank you very much for that and for your trust. And we've added over time the subscription economy in 2019, and this year also the wellness strategy, which is also part of the Meta fund that is selected. If we move to the next slide, then we can move to the next topic.
Thank you, David. So, Karen, later on, we will hear more from both of them in terms of their firm's investment process, as well as the uniqueness of their respective strategies. But first of all, I know our audience have got a number of pertinent questions regarding megatrends, and they would want to hear from both of you as experts. The first question that we hear very often would be, what are the key megatrends that investors should gain exposure to? Because there are certainly many different structural aspects to it, and it might be a bit more mind-boggling to figure out which are the right ones. So maybe I can start off with David. What would be your views?
Thanks so much, Wei Mei. There are many trends and megatrends that are specifically worth considering, but I'd like to actually look at the biggest of them all. It is simply the fact that we started this century with 5 billion people on this planet, and we're going to be, by mid-century, having 10 billion people on this planet. And as the urban population continues to grow, the world is going to add an estimated 2.5 trillion square feet of buildings by 2060. So in other words, we're putting up another New York City every month for the next 40 years. And we're going to have to find a way to house all these people to provide energy for them, to make sure that they are healthy and have reasonable livelihoods and don't have lives that are nasty, brutish, and short. And we also need to deal with the fact that they are going to consume a lot. How are we going to do all of that with limited resources on the planet and with us all trying to avert the worst consequences of climate change? If you think about it, we as a planet, as a world, face many huge crises. And while they may be ones that are going to run for a long time, as investors, we like those the best because they provide us opportunities to find solutions to these long-standing issues, and we can align ourselves with very attractive sources of future growth. If we go to the next page, here are some of those sources of growth. And while the U.S. economy is growing already faster than normal, and it's expected to grow about 4% next year, look at these different themes that are really very much investable today. Some of these climate themes, for instance, like wind capacity or electric vehicles, are really sources of very strong future growth momentum. Empowerment or livelihood related themes are also very important, as digital payments and internet traffic have to grow to bring more and more people into the 21st century. And we need to have really important breakthroughs in areas like DNA sequencing and digital health data to provide the healthcare that these 10 billion people are going to need, and frankly, that people need today. On the next page, we can see how actually in our sustainable thematic strategy, we have three mega themes that align very much with Endowus's three themes of climate, health, and livelihood. And while you can't just invest in climate as a mega theme, you can invest in sub-themes that are directly contributing to solutions to the climate crisis, like cleaner energy, resource efficiency, sanitation and recycling, and sustainable transportation. In healthcare, we can provide access to quality care, especially at affordable prices, food security and clean water, medical innovation and well-being. And in livelihood, if we provide education and employment services, again, at reasonable prices, financial security and inclusion, information and communication technologies or sustainable infrastructure that help bridge the digital divide, we can provide solutions while also really aligning ourselves with very attractive long-term sources of growth. And if we go to the next page, when we look at healthcare in particular as a deep dive, we find that there are really quite a lot of very exciting things going on in the industry. First of all, robots are coming, and they are really, I think, preferred by everyone in terms of outcomes, especially not least by the doctors who can operate them instead of standing manually over a patient in the OR for 10 hours. They can do something with a surgical robot in one. Under diagnostics and life tools, this is really the enabler of what we're beginning to see as personalized medicine and also ways of diagnosing diseases at a much earlier stage. For biotech and pharmaceuticals, of course, we like the fact that we're addressing some of the greatest scourges from a health perspective to mankind. And lastly, in terms of services and telehealth, we are now able, with modern technology, including how we're doing this webinar, to provide healthcare services to a much wider range of consumers and people that need it. And this is a revolution in and of itself. On the next page, just a couple of quick examples. I talked about the electrification of the automobile, but we don't have to just buy Tesla. There are many different ways of investing in this trend. And instead of buying one particular company, we can actually benefit from owning the semiconductor companies that are benefiting from a 3- or 4-fold increase in the number of chips in value terms that need to go into the cars of the future. And so this is a really attractive trend where we're buying the people that are making the picks and the shovels rather than betting on one particular name brand. On the next page, we'd also just quickly point out in terms of livelihood, sustainable infrastructure is a massive opportunity. We just saw the passage of Biden's infrastructure plan, and we can see that the growth outlook just in the US alone for infrastructure is really massive, whether it's at the federal, state, or local levels. And we see opportunities really all around the world. I think that might be the last slide. Yes, one more point that we just want to quickly make is that when we think about cleaner energy and resource efficiency, there are many ways of achieving this. And one of them is thinking about how to make planes lighter. Unlike the automobile, where you can put a battery on board, if you wanted to battery power a jet airplane, it would have to be 5 times heavier, that battery, than the plane itself. So it's really not workable. So what we can do instead is to make the plane much lighter. And the way that we do that is by dramatically increasing the amount of composites like carbon fiber that is used to make the planes that are actually stronger and lighter, hence allowing much lower fuel consumption. So here are some really exciting trends that are investable today that we see providing very attractive long-term growth potential that we think will be realized by the companies that we invest in, which are, we think, going to be the winners of the future.
Yeah, thanks, David. I think having one New York City every month sounds unimaginable, and honestly, I don't know how I would cope with it if I've got Manhattans popping up everywhere. But I think certainly that's going to be something that investors should watch out for in terms of some of these mega trends that are actually happening. So maybe now over to Karen to share your views on how Thematics Asset Management is thinking about the key mega trends.
Yes, and I think the way we approach the key mega trends and how we select the attractive themes that we offer to clients, it pretty much aligns with the approach of David and AllianceBernstein, and nicely complements it, I believe. Maybe taking a step back first, in terms of why, using a mega trend or a thematic lens, to selecting strategies and equity strategies for you guys. Really, the idea for me is that to state the obvious, when you invest in equities, whether it's a stock, a sector, a specific geography, always, what you try to do is really to take a view on the future. And what is really the most reliable and the most tangible way to predict the future, if not the mega trends, i.e. really these long-term secular trends that are really shaping the world in which we will be living, really transforming the way we interact, the way we communicate, the way we entertain ourselves, the way we work as well. So really, if you identify these mega trends and you can build strategies upon these mega trends, the more mega trends you're exposed to, the better. Then, you have already created a theme that in and itself is going to deliver superior secular growth, sustainable growth, probably for longer than the market expects. And if you do so, you can also really, in a sense, benefit from what I would call the kind of duration premium, because the market tends to always say, I mean, this extra growth, this extra returns of this company is going to revert to the mean over 2-3 years. And usually what we see for companies that are exposed to these mega trends is that, I mean, this reversal to the mean takes much longer than, I mean, the market expects. And so you can benefit from this extra growth. And if you do a good job in terms of selecting the stocks within these attractive themes, then you can add an extra layer of returns. So this is really, I mean, the idea beneath using these megatrends. And to us, I mean, the four megatrends that you see here are really the base for, I mean, having a good sense of what the future will look like and how the flow of money is going to be directed going forward. So demographic trends, social demographic trends, and as David, I mean, mentioned, really urbanization, aging population, all these issues around growing population are sub-trends that you need to take into account when you devise a new strategy. Technological innovation, quite obvious as well. Probably the one that has the most impact shorter term, we believe. Demographic is really a kind of slow burn, but really impactful element. Innovation is probably more shorter term, having, I mean, nearer term impact. Also, globalization or deglobalization trends are quite interesting. And you see that today with, I mean, the COVID and the sanitary situation, where you see a kind of reshoring and deglobalization of our world that is changing business models, companies reviewing the strategies, and really affecting the way, I mean, companies are organized. And obviously everything that has to do with environmental issues and the scarcity of resources. That are the four pillars of what we think should be the base for identifying attractive themes. Then the question, when you have, you identify an attractive theme based on as much of these mega trends, the better, obviously. The question then, critical question in terms of investment is how you can translate and how you can make sure that an attractive theme can also be an attractive investment proposition. And that's where really comes into play the question of how you devise your investable universe, how you make sure that you have the agility and the flexibility to manage these portfolios across over the long term, because obviously by definition and by design, these strategies are long-term in nature. And so you will be going through different market phases, different economic cycles, and you make sure that you can always structure the portfolio that best suits these different phases and cycles. So that would be probably this for this slide. And turning to maybe the next, the themes that we have identified as really having this exposure to these different, what we call primary forces, but I mean, you can call them also megatrends, are AI and robotics, very much exposed obviously to technological innovation, but also to demographic trends, as you can see, obviously, with the resources and employment issues that we have today in many countries, where automation and robotics can really supplement and complement the workforce. Safety, which is really a primary need of humans, but also really underpinned by regulatory trends, and where you see safety becoming really increasingly important in electronic payments, in food safety, in transportation, in many, many verticals of the economy. Subscription economy, really acknowledging the fact that, I mean, really the consumption patterns that we are changing. Really, the new generations are really less and less into ownership and more into experience, using products and services when needed. And where, I mean, many companies are transforming their business models into a subscription-based business model with many, many benefits behind it. Water, I mean, quite obvious, the scarcity of water, less and less availability of the resource, more and more consumption, more and more pollution. So you need new solutions really to make sure that you can really bridge the gap between an increasing demand for quality water and for quantity of water that is really an issue in some certain locations of the world, and the supply, which is becoming more and more challenging to provide. And probably last, the latest strategy that we've launched around wellness, with you acknowledging also that people are more and more willing to take care of themselves to make sure, and the COVID and sanitary situation has made this even more acute in a sense. Whether it is their physical well-being or their mental well-being, and where this is opening up new areas of growth for companies, not on the curing side, but more on the prevention side, for many companies that are really addressing these needs and the demand of individuals.
All right, thanks a lot, Karen. I think for investors, you always hear a lot about the different secular growth drivers in the media, but having said that, it's often difficult to figure out what could be the attractive investment themes. And I think, like you rightly said, the key is always to find where is the sweet spot. So now maybe let's move into another area. Broadly speaking, over the course of the last couple of years, how do you see interest in all these different themes as well as structural trends changing? Have there been quite a bit of difference such that it's always important to rotate across new themes and participate in, let's say, new drivers that are coming up? Can I start off with David on this point?
Sure. Thank you very much, Wei Mei. I really think, when I answer this question of how thematic investing has changed over the years, it's actually tied to a question I noticed in Slido about the sweet spot for investment timeframes. I feel like, when we are investing, we need to be long-term investors to align ourselves with long-term investment trends. But we also need, as Karen was saying earlier, to balance that top-down lens with a very strong and robust fundamental bottom-up approach. And what we think is really important is that we're investing in long-term trends that are going to work today, and that actually you should be able to expect will work generally through market cycles and through most of that cycle. And I think when you think about long-term trends, they really don't need to be, themes don't have to be tactical. Thematic investing can actually be incredibly long-term and structural. And I would just ask you to consider 3 of these risks that you see on this page. Karen mentioned earlier that people are all getting older. That's just the way of global demographics being destiny. And what we also know about aging populations is that their medical needs and costs go asymptotic, including for every one of us. And so having exposure to healthcare within your portfolio is really the best way to hedge rising medical costs as we age. When we think about our livelihoods, they are also constantly being disrupted increasingly by very creative, revolutionary companies. And a fund that really focuses on disruptive innovation can really hedge some of the risks to our livelihoods. And climate solutions, of course, are the best way to mitigate some of what are the biggest existential risks to us as humanity, and to deal with both the physical and transition risks for all capital markets by owning some of the solutions to climate change risk. And on the next page, I would just have these 3 key reminders to everyone in the audience. Satellite exposures don't need to be tactical. They can be long-term and structural in nature. And you should really demand better long-term risk-adjusted returns from your thematics. They should be able to provide not only great upside, but also pretty strong downside protection. And lastly, thematics can provide a great top-down lens, but we would recommend not going too narrow. And of course, Endowus is already providing you that solution with a multi-strategy portfolio. but you really also need to complement that top-down lens with a very strong, active, fundamental bottom-up approach.
Okay, thanks, David. Karen, on your side, do you see the changes happening over the last couple of years?
Yeah, absolutely. And to complement what just David said, on our end, what we've seen here, I mean, you have a snapshot of how, I mean, European investors see thematic investing. I mean, it has moved from really nice to have to must have. Here we have pretty much the allocation of investors in thematic strategies, globally speaking, in the 3 years to COVID, really. And you see that, I mean, investors were pretty much exposed marginally to thematic strategies in general, and really, I mean, what happened with COVID is really an acknowledgement that thematic investing was, I mean, the way to go going forward. Not only, I mean, on a structural way, because obviously, I mean, people tend to recognize now that, I mean, having only a sector or geographic allocation is making less and less sense. Think of, I mean, an investor that has a US, wants to get exposure to the US market and buys, let's say, an ETF on US equities. I mean, today it makes less and less sense in a globalized world where, I mean, the companies are more and more diversified in terms of end markets and where they sell their products and services. And therefore, I mean, the way you gain your exposure to the US market is suboptimal in a sense because of this globalization. And the same goes when you approach, I mean, equity investing based on a sectoral approach, because, I mean, this classification in terms of sectors are quite arbitrary in nature. Think of, I mean, you want to gain exposure to the FANGs of this world, and your initial reaction would be to buy, let's say, an IT sector ETF, for instance. The thing is that, I mean, when you look at the classification of Alphabet, of Apple, of Netflix, I mean, they are split into different sectors, into communication services, into IT, into consumer discretionary. And therefore, really, I mean, the way you approach your equity investing has changed because, I mean, these arbitrary classifications don't really make sense anymore. And this thematic lens really makes sense from that perspective, because really you have a better grasp on what you gain exposure to when you invest in such themes. And so that's really what, I mean, has been reflected when if we move to the next slide, you see that, I mean, for European investors, what happened over the past, recent past is that, I mean, they have increased quite significantly their exposure to thematic strategies overall. And they've also diversified quite significantly the strategies to which they are exposed. And I think it's really, really the acknowledgement of these changes in terms of how we approach equity investing, globally speaking. And COVID, what COVID really brought is really an acceleration of that trend, and really a kind of expansion of the themes that are available to investors in terms of what they want to gain exposure to. So, and if we move to maybe the next slide, I mean, in Asia, it's pretty much the same trend. On the left-hand side, what you see is really, I mean, what categories of investors in Asia are exposed to thematic strategies. And you see that today the bulk is still into ultra high net worth individuals, but I mean, 1/4 is already into high net worth individuals and 20% into the mass affluent market. And what you see in terms of the age breakdown of these investors, you see also that it's quite interestingly split with half into the 20-40 years bracket, 45% into the, let's say, the 40-60, and you see also a tiny portion, which is more the older generation that are exposed to thematics. So quite promising in terms of the momentum and the impetus that is really driving a thematic strategy in Asia as well. And last, I mean, on the right-hand side, what you see is really how I mean, what allocation is done in thematic strategies by investors. And you see also that, I mean, this portion of thematic strategies within the context of a broader portfolio is increasing quite significantly. And we'll come to that in terms of how we approach the position that you should have in thematic strategies in a broader portfolio context.
Right. Thank you, Karen, for this very helpful insights. And it does also seem like investing in thematic funds is a growing trend in itself. And I think it also highlights the ever-changing landscape of themes and how different themes can be actually playing out together. And now, having talked about the megatrends landscape and how investing in this segment has been evolving, the natural follow-up question would be to ask if an investment in megatrends necessarily equates to an investment that is high risk and high reward in nature. David, could you start us off with this question?
Thanks, Johanna. It's a great question. And what I really think we need to decouple here is the fact that while the trends that we're investing in and actually the themes and the companies that we're buying are super exciting, as George Soros once said, if you find investing exciting, you're doing it wrong. What we want to actually do is to align as many things as possible as investors in our favor to make sure that our clients get the best possible experience. And we are able to do that, right? Especially in a growth tilted portfolio, as a thematic investment portfolio probably is going to be. We're looking for very high quality businesses, so very profitable, that can reinvest profitably so they can compound their returns for long-term sustainable growth, right? So you need to both have high profitability today, or at least the capability to be very profitable, unless you're reinvesting for growth. And you have to believe that those returns on capital are going to be higher than their cost of capital, and that it's going to keep growing or stay high years into the future. That's really the immutable law of investing that you should be doing, whether or not, right, you are investing in exciting themes or in a standard portfolio. And let me just give you a good example. Let's take a healthcare example. If we could go to the next page, please. Everyone likes healthcare because they think, well, everyone needs healthcare. It's completely macro insensitive, right? It's not really price sensitive because you pay whatever the going rate is. You don't negotiate in a hospital when you have a serious condition. But yet, despite being both defensive and secular growth oriented, unfortunately, many investors investing in healthcare, we think, take the wrong tack of treating it like a casino. And they make it all about betting on scientific success when actually you can invest in a very different way. We actually know that 90% of drugs that go through the FDA approvals process fail. Okay, so the chances are really not in your favor. And you can see here, of the thousands of biotech companies founded, there's been 790 IPOs in the US since 1976. Only 59 have one or more approved drug, and only 5 have 4 or more approved drugs, right? So this actually tells you you're better off, if you want to capture the benefit of long-term success and being able to be aligned with the growth trends of the future, don't bet on small and medium-sized biotech companies that could be 10-baggers, but are more likely to strike out. We actually prefer to own a portfolio of high conviction healthcare companies across the healthcare spectrum, from med tech to managed care to biotech and other types of services like life sciences and DNA research, that can actually get us a really attractive return that beats benchmarks, but that also provides you that surety of outcome and downside protection. And you can still do all this while being invested in the most exciting themes of our generation and beyond. I think there might be one more page. So I just wanted to touch on what we look for in a portfolio like this. We really want a company that has higher improving returns on capital, a strong reinvestment rate, healthy balance sheets, businesses with durable competitive advantages, and where we have very long-term conviction based on positive risk-reward skew that only comes from doing deep dive fundamental research. What we don't want is companies that just grow EPS at the expense of profitability, that acquire stuff at expensive prices that don't meet their cost of capital, that lever up too much, that are based on predicting binary events that haven't happened yet, and that are very short-term in nature. That doesn't align with extracting the benefits of investing in long-term megatrends.
Right. Thank you, David. And I think that makes a lot of sense because essentially when you identify the right company and as it grows in future, it actually becomes less of a risk because of the progress it has made. And now I wanted to ask the views of Karen as well, because I'm sure Thematics, you've seen you have launched many different fronts, and I think you're best placed also to talk about whether investment in megatrend relates to high risk and high returns. So Karen, please.
Yeah, thank you. Yeah, obviously, I mean, when you consider investing in thematic strategies, because I mean they're based on secular trends and sustainable growth. I mean, the idea is obviously to extract superior returns from these strategies. So this is really, I mean, the DNA of our funds. It's really, I mean, high conviction based. It has a small mid cap tilt. It has this higher growth tilt as well. And really the idea when we devise these strategies is really to create attractive investable universes. And normally, I mean, the idea is that if you have done your work properly based on these megatrends, you have devised the strategies, you already have created an investable universe that is supposed to grow at a higher rate than the broader economy. And therefore, you are already fishing in an attractive pond in a sense. You have already created what we call the thematic alpha. And then really the idea is that if you are a good stock picker within this investable universe, which is attractive already by nature, I mean, you can add an extra layer of alpha from your stock picking. And I mean, to David's point, I mean, really, I mean, the idea is really having this long-term view on the stocks because you are really managing long-term thematic strategies. Try to identify the compounders and gain exposure to them. and really the idea is obviously to deliver superior growth from a return perspective as well. But I mean, it doesn't always come with higher risk and higher volatility. It very much depends how you approach your portfolio construction. And here we have tried to illustrate on this slide, I mean, how you can manage that risk that comes with maybe some focus strategies, single theme strategies that tend to focus on a specific part of the market. So here you see on the left-hand side that if you add one thematic strategies to your portfolio, I mean, your level of volatility is about 19%. And the more you add additional strategies, thematic strategies to your portfolio, the more you can manage and bring down your volatility level, gaining exposure to different also engines of growth, different themes, exposed to different types of secular trends. And you can therefore, I mean, make it more stable, more robust, and also coming with lower volatility and lower risk. So this is really the attraction of really combining different themes into your portfolio to really enhance return and also to diversify risk and bring down volatility. Because obviously the diversification angle to thematic investing comes from the fact that normally if your investable universe is well designed, your level of what we call the active share, i.e. the overlap of your investable universe with traditional indexes is going to be quite limited, quite small. And therefore, the fact that you add these thematic strategies to an existing portfolio will bring diversification and therefore would mitigate risk within your overall portfolio. Turning maybe to the next slide. We've done the exercise, with our five thematic strategies, starting with a generic balanced portfolio that you see at the bottom of this chart. And really, what we've tried to figure out is if you were to add 5%, an increment of 5% exposure to different themes that we have on offer, what would be, your risk-return profile for your existing generic balanced portfolio? And you see that, if you add a water strategy, for instance, what this means is that you are going to enhance your returns and lower your risk quite significantly. If you were to add the subscription economy strategy, you would, mitigate your risks to maybe a more reasonable extent, but you would be enhancing your returns quite significantly. And therefore, that would also improve your risk-return profile versus your existing portfolio. And on the other side, on the right-hand side, you see the robotic strategy, where you would be increasing your volatility, but something which is still manageable from a volatility increase perspective, but your returns would be quite substantially increasing as well. And the combination of this, to the previous slide, the combination of these strategies into a multi-theme strategy that is here illustrated by the Megatrend Fund, what it brings to you is really a reduced volatility, diversification, and extra returns. So that's really, how you make your portfolio more resilient. You bring a performance kicker and a diversifier.
All right, thank you, Karen. It's good to know there are so many options available for investors, and also indeed encouraging to see how the addition of thematic strategies can actually bring down volatility while at the same time enhancing returns, and thus making for a more robust overall portfolio for investors. And so moving on to our fourth discussion question, which I'm sure our investors are eager to hear about, is the uniqueness in the strategy and investment process of Thematics and AllianceBernstein that are in the Megatrends portfolio. And so, Karen, would you mind starting off by sharing Thematics' secret sauce?
Yeah, I think really the key element in terms of what makes us unique is really the investment process and the way we approach thematic investing overall. And the idea is really, the DNA of our portfolios is really high conviction based. It's really bottom-up stock selection. The way we approach it is also quite well-defined strategies, focused investable universes to really develop an expertise within the theme. Also, the way we're organized in terms of the two fund managers that are also analysts, so that we have a kind of full ownership of the investment cases of the companies we include in our portfolios. I think it makes really it's really critical because when you have a bit of turbulence in the market, you tend, if you're just a portfolio manager, and you're not the analyst at the same time, it leads to sometimes the wrong behaviors in terms of what you do in terms of portfolio activity in your portfolio. So in terms of the investable universe, what we do is really designing strategies with the boundaries of the investable universes that are quite well defined. And we have opted, maybe contrary to some of our competitors, to really only focus on the providers of services and products that bring solutions to some of the challenges that we are facing collectively, not really the adopters of these technologies, for instance. The idea being also that we want to gain as much exposure to the underlying megatrends that are more present in the companies that are offering these products and services rather than the adopters. I'm thinking of, let's say, a company adopting a certain technology that is available in AI and robotics, for instance. It will be something that will be included in its business model, but it will be a tiny portion of what is really driving the equity story. So we want to be on the other side where we have as much exposure to AI and robotics than as much as we can. ESG is a very, very important as well element. We have some specific exclusions for our investable universes. whether they are product-based or they are behavior-based. We exclude companies at the asset manager company level, not at the fund level. We also have ESG, which is a very critical element in terms of how we score the companies. ESG is as much important as the assessment that we have of the management of the company, of its business franchise, its quality, or of everything that relates to the stock itself in terms of volatility or liquidity. It really defines whether we would be including a stock in our portfolio as much as the other criteria. And also this ESG element is a critical part in terms of how we size the positions within the portfolio. And it's as much important as the other pillars. And obviously the upside that we have on the stock is really what is going to ultimately dictate the ultimate weight in the portfolio. So this is probably something really quite unique. And if I were, again, to re-emphasize, really the DNA of the portfolio is high conviction based, no small positions of 50 basis points, 75 basis points. We are either convinced and we have at least 1% allocation to that position, or we're not, and we don't have at all that stock. So we manage, strategies that are portfolios that are quite concentrated, usually between 40 and 60 stocks. We have 40 to 50 most of the time. High active share, small mid-cap tilt, and obviously a growth bias. That would be really the DNA of the process itself.
Right. Thank you, Karen. Thanks for sharing about Thematics' secret sauce. And obviously, the AllianceBernstein funds are different in mandate and probably the universe as well, which is the reason why we've chosen both of them to put into the Megatrends portfolio. So over to you, David, on the uniqueness of AB's investment experience.
Thanks so much, Johan. Let me first speak about our sustainable thematic portfolio, which is the largest single holding in this Endowus satellite portfolio. And, we have a pretty rich heritage of thematic investing at AB going back over 20 years. And I think what I'd want to point out is that we've been researching sustainable themes that can be great drivers of growth and performance for the last 15 years. We started looking into hybrid vehicles 15 years ago, into abating climate change and climate change solutions 13 years ago, the dawn of molecular medicine 10 years ago. And after Dan Rorty, who was previously an analyst for the strategy, became our CIO, he was really instrumental in making us, one of the first, if not the first, portfolio managers to adopt the Sustainable Development Goals as the framework for our investments. And unlike some other strategies that might just take the SDGs kind of at the back end of the process, this actually, in fact, defines our investment universe. And I think this is quite powerful because if you think about the SDGs, they are signed on to by 193 countries, and economists estimate they're roughly going to cost 90 trillion to fulfill by the year 2030. And these goals are largely going to be getting there through the private sector. And so we do think that having this top-down lens is very helpful for opportunity identification, but we then combine that with a very rigorous private equity-like bottom-up process that allows us to measure both the return potential on an IRR basis as well as the potential risk, including ESG factors into the cost of capital assumption. And we just invest in the very best companies across these different themes. And we think that this is, perhaps the most universally accepted definition of sustainability in a way. And we've been able to do this already for the last 5 years. So we're very pleased that this is working. And we've added a couple of other strings to our bow. For instance, because we are working with Columbia's Earth Institute, we've been able to actually parlay some of the work that the researchers are doing into research projects with us directly on topics like synthetic biology, for instance, which could revolutionize crop yields around the world. And we're very excited about how we can continue to find out-of-the-box solutions in underappreciated parts of the market that can give us long-term growth and returns, as well as being solutions that solve some of the world's biggest problems. And I think, as Yuhan mentioned, our healthcare portfolio isn't necessarily a sustainable portfolio with purpose, but we still do integrate ESG very robustly into our investment process. And when you combine that with a focus on very high quality and strong reinvestment rate potential, this leads to better risk-adjusted returns, which we feel is the reason why we have stood out in terms of that Sharpe ratio amongst our healthcare investing peers.
Right. Thank you, David and Karen. And hopefully at this stage, after hearing the key competencies of both firms, our investors are already finalizing their investments in the Megatrends portfolio. And that also brings us to the last panelist question, which is how should investors be allocating to thematic investments in their portfolio? And Karen, with 12 years of experience managing global thematic equity funds, I'm sure this is a question that you'll be very familiar with. Could you let us know your thoughts first before we have David close off the panelist discussion?
Sure. Yeah, I mean, over the years, I mean, what we've seen, meeting and discussing with clients and the way they approach thematic investing, I mean, you have different approaches. The first one, and probably the one where, all started in terms of thematic investing, was really the idea that, you had thematic investing within a core satellite approach, where you had your core investments, traditional allocation to sectors, to geographies, to different asset classes, obviously, and where you were looking to add thematic strategies within your satellite bucket. So a tiny portion of your portfolio, let's say from 5 to 10% max, and where the idea was really to identify a very attractive theme, single theme usually, where that you would be adding to your portfolio, and where the purpose of this strategy was to really bring you diversification and a kind of performance enhancer. And over time, and with people also realizing more and more that thematic investing on the equity side was the way to go, and because of this acknowledgement of that, the traditional ways of investing were no longer making really sense. What we've seen is that clients have gradually shifted to different ways of approaching thematic investing. The first one was really a hybrid version where within their core equity allocation, they were adding thematic strategies, sometimes a combination of different single themes, sometimes a multi-theme strategy to their core equity allocation alongside sectors, alongside specific geographical equity allocations. And over time, what we've seen is really, them shifting a bit further towards the right-hand side of this chart, where because of the long-term nature of thematic strategies, they've turned things upside down. So starting with their core allocation and making thematic strategies the core of their equity allocation. And usually that's done with multi-theme strategies, like our Meta strategy. And then adding some, let's say, satellite strategies, more tactical in nature, whether it is a specific sector, whether it is a specific geography, and really keeping the core for the long term into thematic strategies. That's really, the way gradually, the market has become more sophisticated, more accustomed also to the themes themselves. and where they have made more ways to thematic strategies into their portfolios. And if we turn to the next slide, here, I mean, we've tried to illustrate as well, I mean, what this means depending on your risk appetite. And we've started with it really with, let's say, a kind of broad global equity exposure that we've illustrated here with the MSCI All Country World Index, which is in red here. And so if you're not so much willing to take a significant tracking error deviation versus, I mean, this index, I mean, the bulk of your portfolio will be made up of this index itself. So let's say an ETF, 2/3 of it probably would be in this index, and you would be adding a bit of different products and asset classes to your portfolio to diversify a bit. But if you're willing to go a bit more in terms of tracking error versus the index, you can maybe add some extra layer of alpha. For instance, some country tactical asset allocation, having a top-down view on markets, for instance. And if you're willing to go a bit extra in terms of tracking error, you could also add a different alpha strategy. For instance, maybe some factors, a momentum, or a growth tilt to your portfolio. And if you're really unbenchmarked and you're willing to have a bit more deviation versus the index, then, I mean, you see that, I mean, this pink element on the right-hand side, I mean, your budget allocation or your allocation to thematic strategies increases quite significantly. And this is really, I mean, comes down to the fact that the thematic strategies are unbenchmarked and where the deviation versus the MSCI is going to be quite significant. I mean, this is really making sense given that we have high active shares versus the MSCI ACWI, and therefore we don't measure any tracking error versus this index. It doesn't really make sense. But for investors that are willing to really depart from index investing, that want extra returns, they want diversification, they want to mitigate risk with a multi-theme strategy, I mean, they can move to thematic and make it a bigger portion of their portfolios with the extra benefits in terms of risk-return proposition.
Right, thanks, Karen. And also, this is an additional feature about the Endowus Megatrends Portfolio, because we realized that many investors have commented that they have not seen many of the names in this portfolio. But there's also an interesting highlight, because this is where we believe alpha generation can be found, instead of crowding into very popular names like Meta and Tesla already. And so I wanted to pass on the time as well to David, because as a senior investment strategist, you probably answer a lot of these questions, and as well as from Endowus ourselves. So what are your thoughts on this question?
Thanks, Johan. I think it is a very good question. Let me answer it from the perspective of both of the portfolio managers I'm representing this evening. Our healthcare portfolio manager would simply say, you know, I just buy the very best healthcare companies I can find globally, and just continue to own them, and, you know, ride that horse, because it's going to work a lot better than trying to, you know, guess and try to game every single quarter. Now, on the sustainable portfolio, I think what Dan Rorty does actually is quite instructive about how to manage risk and allocation in a thematic strategy. Now, first of all, where do all of those sub-themes I showed you earlier come from? They came from us taking the 169 sub-themes of the UN Sustainable Development Goals and figuring out that there's 140 different products and services that directly contribute to those goals. And by finding the companies that have a significant portion of revenues that go into that, that helps us define a 2,000 company universe. And what we do to manage risk is, first of all, we make sure that we have a minimum of 20 and a maximum of 50% to each of those three mega themes of healthcare, climate, and livelihood. And what we do on top of that is we run a lot of correlation work to make sure that not everything that we own is actually correlated with one another. And that's really the benefit ultimately, right, of not investing in too narrow a theme. And so in addition to having great companies within that theme, and that's that alpha that Karen was talking about earlier, both from an asset allocation as well as from a security selection perspective, you can really do a great deal more for your clients by allocating within the opportunity set properly, and also just doing great bottom-up research.
Okay, thanks a lot, David. So I think key takeaway for investors today, if I can summarize, would be that it is going to be important to be active when it comes to investing in megatrends. So it's going to be a much better outcome compared to just selecting your own ETFs. And also at the same time, I think in terms of the alpha that can be generated from a bottom-up research approach, this is going to be equally important. And it's not just about buzzwords. So at this juncture, I see a couple of questions, both on Slido as well as YouTube. I wanted to ask our panelists if they have a view around some of the key buzzwords that's coming up in the industry right now. The first one that has been quoted would be metaverse. And our investors are interested to know whether this is a theme that you are covering and it's embedded in some of the sub-themes that we have discussed, or should investors not be fooled by some of these buzzwords that's just coming along? So maybe, David, you want to kickstart first, and then I'll hand over to Karen.
Well, there are obviously some interesting long-term trends embedded in this vision of the metaverse that has been laid out by Mark Zuckerberg and actually by other companies as well. But what we really want to make sure we're aligned with is not one person's vision of what the future looks like, but where we have very high conviction, the world is definitely moving to. I would just caution everyone to remember movies like Back to the Future, which imagined what the world would look like around now, right? 40 years after the movie was made. And I have to say, while some things might be accurate, others are completely wrong. And so we need to make sure we are owning things that are going to happen simply because the world needs it. And I think it's that combination of very clear high conviction need for that particular solution, combined with a very high conviction in the bottom-up ability for a company to maintain its competitive advantage in a particular area, that makes it exciting. And so, going back to your question, to answer it, while we think that the metaverse theme is exciting, there are very good reasons to own some of the companies that are touted as metaverse plays today, but we're not necessarily convinced that's the right overriding lens by which to look at the world.
Yeah, thanks, David. When you alluded Back to the Future, I thought that was a very age-revealing comment, because that shows that we were from the same era and watching the same movie. I'm not sure if the younger demographic would be able to identify with, but point taken. Yeah, over to you, Karen. What's your view on metaverse?
Well, it's a very interesting question, and I mean, it's quite interesting also to see that Facebook is changing its name to Meta, and I think we have, first of all, some copyright with our Thematics Meta Fund, right? So quite interesting from that perspective. But I mean, quite concur with David that the concept in itself is quite attractive, it's quite fashionable, and maybe that will translate into real world opportunities for companies and for the consumer, but that remains to be seen. And so you need really to base a strategy really on really solid grounds, And for the time being, it's more a concept than something that really can be, that is really directly actionable. The way we approach it, on our end, is that our existing strategies that are part of the meta strategy, have exposure to the metaverse, in terms of, if you think of our AI and robotics within the AI segment, companies like NVIDIA would be a great enabler of the metaverse. Within the safety strategy, we have exposure to some of the electronic payments and cybersecurity companies that would need, to David's point, in terms of the picks and shovels, that would be the ones protecting the network, and would be also maybe implementing the payments within that virtual world. And the same for wellness, where these consumption habits are changing and maybe will be done within the metaverse. This is something we would be capturing as well within the wellness strategy, for instance. So this is some indirect plays, but enablers and beneficiaries of the metaverse. We are obviously monitoring what's going on, and thinking about that and doing some homework. But for the time being, we feel that it's really a bit too soon to really make it something tangible and really sustainable over the long term. But something to keep monitoring, definitely.
Karen, I think you guys have got the first mover advantage. Even before Facebook chose the words meta, you already have your meta. Yeah, so
quite pioneer from that perspective.
Indeed. I think second question that I see is regarding rising interest rates, and I think investors are concerned whether in a rising interest rate environment, does it mean that it might be more risky investing into megatrends? So David, what's your take on this?
Well, why don't I answer this from, again, two different perspectives, given we have two strategies represented tonight. Healthcare is a very easy answer. It's probably trading at its lowest, or its highest discount, I should say, to broader indices that it really ever has. And this is because of political risk that we think is actually highly avoidable in a healthcare investing context, which means, especially when you consider that in highly inflationary times, healthcare has typically been able to outperform, means to us, actually, that's a pretty good place to be. I do think, there is a broader question of how can one own a growth tilted portfolio that is probably going to have some valuation premium to the market. And our answer to that is twofold. One is, first of all, if you get the earnings right for the companies that you own, and they are also generating earnings today, first of all, that means you're not owning too many Teslas in your portfolio, where most of the value is in super long duration equities, right? Where 95% of the value is in the future, not made today. And the other thing that I'd say is, when you own businesses that are just generating a great deal more earnings for longer than the market expects, these types of businesses just grow out of their valuation premium faster than the market thinks. And so what appears expensive today actually can look screamingly cheap 3 or 4 years down the line.
Karen, on your side, do you see rising rates as a factor when it comes to investing in megatrends?
Well, this is, a macro consideration that we take into account, just like we do for inflation, for instance. But as long as, we believe that as long as, this increase in rates is going to be gradual, well communicated by the different central banks, and increase to a reasonable level, this is something manageable, even for the long duration strategies or stocks that you might have in your portfolio. And from a valuation perspective, I mean, obviously we are fundamental stock pickers, so we spend a great deal of time looking at really the financial profile and the quality profile of the companies, and we put that into we put valuation in context of these fundamentals. And sometimes we have strategies to, AI and robotics is one where you have multiples that are always trading, higher than the broader market. This is something that you would expect. What is really important is to check where you stand on a historical basis versus its own history versus the rest of the market. And if you have, and to put that in context of the growth associated with, these valuations, and whether the visibility on this growth is good enough. So sometimes you might buy your stock that is trading at maybe 30 times PE, or that has, let's say, 10 or 15 times EV to sales. It very much depends on what level of growth you have, and what visibility you have on this growth and comfort that you have on the ability of the company to deliver that growth. So what we monitor at the portfolio level is that, valuations make sense, and that you have also the diversity in your portfolio in terms of exposure to different drivers, different verticals, so that you can mitigate the macro elements that can affect the performance of your portfolio shorter term. Again, cognizant of the fact that, just David said, we are long-term investors. We're looking for compounders, and the idea is really to outperform the broader market over the cycle. And so it doesn't really make sense to be invested in thematic strategies if it's only for a couple of months. You need that time to really deliver this sustainable growth, and to have this compounding effect really to be in full motion, if you will.
Yeah, absolutely. And I think when it comes to megatrends, it's going to be multi-year. It's not something that is going to be just relevant for a particular rate cycle. So I think investors shouldn't be overly concerned about rising rates being a key factor that could impact the return outcome. Having said that, Johan, maybe over to you, because I do see a couple of questions relating to the expected return as well as risk on the portfolio, and how does that compare to a balanced asset allocation?
Right, thanks for the question, Wei Mei. So I think one thing to note is that many of these thematic funds themselves were only incepted or incorporated about 5 to 7 years ago. And as such, the actual history of the Endowus Megatrends portfolio is not as long as the track record suggests. So to compensate for that, or to augment that, we have actually backfilled with the historical returns consistent with the Endowus methodology. So investors, if they want to know more about how we actually done that, they can refer to the Endowus webpage. But in short, I would say the more accurate representation of the Endowus Megatrends portfolio would be to look at it from a 3 to 5 year basis, which is where most of the funds are already incepted and actually generating actual returns. Yeah.
Okay, thank you, Johan. And for investors who are interested in finding out more in terms of the overall risk as well as return profile and how the portfolio was constructed, please do go to our website, where there is insights article that focuses specifically on the Megatrend satellite portfolio. So with this, I'm going to end off with our Q&A for this evening. Just a quick reminder, we'll be focusing on investing in China next week, on how investors can balance both growth as well as risk across equities and fixed income. So I'd like to take this opportunity to thank both our distinguished panelists, David from AllianceBernstein, as well as Karen from Thematics Asset Management, for joining us this evening. I think fantastic comments as well as amazing insights from both of you. So with that, final words from David and Karen before we sign off.
David, please.
Well, I would just say that just remember that these are satellites, but they're not necessarily tactical. Actually, megatrends are long-term in nature, And you have to just find ways of staying invested to get the benefits of being invested in megatrends. And I think it's that investment experience being better that really helps investors benefit from these megatrends over the long term.
And just thank you for having us tonight, and thank you for your trust, and look forward to engaging with you again and with your clients in the near future as well.
Thank you, David and Karen. So with that, this is Wei Mei as well as Yuhan, who is signing off. And we look forward to seeing you again at our next Endowus Assess live webinar. Thank you, everyone, and have a great evening ahead.
Thank you. Bye-bye.